After last week's Supermoon Options Insight with Kevin Kelly of Kelly ETFs, I was told, yes, there's some unusual trades out there, and I was told that once again today. Scott Bauer of Prosper Trading Academy, CEO over there. Thanks so much for joining us. And so there seems to be some agreement that there's some very unusual VIX trades out there. Before we get to that, though, what do you make of today's selling action? Is it a pause in the rally, or is it a real cause for concern for the bulls, especially the big tech bulls?
You know, I think at this point it's a pause. I think the results out of Netflix and Tesla, or at least the reaction to the results, is just an excuse to take some money off the table from some of the other big ones before they report, mostly next week. So I think that's just a good, valid reason for people that have been long in this marketplace. And you're just kind of seeing that overflow into the rest of the NASDAQ market. Fundamentally, technically, nothing has really changed in terms of sentiment. And I will tell you overall, Abigail, because I'm standing right here in front of the S&P 500 options pit. The VIX pit is right next to me right here. There is no panic. There is no fear. The VIX is barely unchanged today. S&P volatility is still pretty low.
Yeah, and I'm so glad to see you there back at the CBOE and to be able to interview you from that spot. And, it's interesting because Alan Nuckman of Agora Trading, he had told, or of Agora Financial, I should say, he had told us that the reason that there's a surge there at CBOE, it has to do with the new interest in the one-day option. So is that why the VIX is relatively suppressed? Because, Scott, if we compare it to the VIX the NASDAQ 100 VIX, which is above 20, there's like a 6 or 7 point spread. Is that a reason for worry?
No, not really at all, because I think if you look at the volatility history of the one-day options or the zero DTE options, which have just grown exponentially in volume here, you're going to see, quite an ebb and a flow. And you'll typically see vol pick up before a big earnings announcement, before a big economic announcement. We've got the Fed next week, and then it drops down. So that could be partially the reason why we've seen the VIX suppressed a little bit, because there's so much activity in the zero DTEs.
Okay, so I'm going to take one more shot at this in terms of there's a reason to worry. Going back to 50 Cent, this particular trader has become pretty famous for putting on these big VIX trades ahead of super spikes, if you will. I know that they're not all successful, but a few of them have hit some of the big sell-offs. So you are seeing some of those type of trades out there. Is 50 Cent back and alive, and is that a reason to worry?
Well, we don't know if it's 50 Cent or not, but it sure seems like it might be. Yesterday and today, there was a massive spread that happened. So somebody had a position on long the September 40 calls in the VIX and then short 3 of the September 60s. That position has been closed out and rolled out 3 months to December. But the strikes are much lower. So that September position, which is closed out, is now a similar position, but 28 strike, 45 strike. So bringing that, the level of the VIX way down. So if it's 50 Cent or not, whoever it is, what they're doing, Abigail, they're just buying more time. And really, to me, that just says a lot of complacency in the near term, and maybe the back end of the year, the last quarter, that's where things start to get a little volatile.
Yeah, technically, I would say the NASDAQ 100 suggests that could happen at some point, but it sounds as though you don't think that's anytime soon. Great to speak with you, Scott. Scott Bauer of Prosper Trading Academy. Thanks for joining us for Options Insight today. And from New York, this is Bloomberg.